All right, we're going to do a brief exercise 22-20, which is investing activities, and it's going to use the data from exercise 22-15 on the previous page, 13-63. And it's important in this investing activities that we recognize there are kind of two meanings for the term investing that sometimes catch people a little bit by surprise the first time they hear it. We normally think of investing in the financial sense, like we invest in stocks, we invest in bonds, that kind of thing. That's very true investing, and that's one of the meanings. But economists also consider investing in property, plant, and equipment, or buying property, plant, and equipment as investing. And so in the investing section of the cash flow statement, we're going to take into account both of those meanings. So if we invest in somebody else's stock, not our own, invest in somebody else's stock, that's investing. If we invest in somebody else's bond, that's investing. But if we buy a new piece of machinery, that's also investing. And if we dispose of a piece of machinery, that will be cash that comes in from investing activities. It's actually disposing of an investment. So that's considered an investment activity. So if we look back on 22-15, at the very bottom of the page, the narrative says, during the year, Simon's Products purchased new equipment for $195 and sold equipment with net book value of $26 for $52. All right, so for the cash flow from investing, we're going to have purchase of equipment, and that's going to be $195. Now, we're also going to have the sale of the old piece of equipment, and we're going to just use the cash that came in there, and that is the 52. And we need to make sure that we bracket that because that is an outflow of cash, a use of cash, not a source of cash. And so we add those two together and we get 143 use of cash. The cash flow statement back in the old days, so this is actually before I even started doing accounting in the 80s, the statement used to be called sources and uses of funds instead of a cash flow statement. It's the same thing, exact same construction, but you might hear somebody refer to that. You'll hear me from time to time say this is a source of funds, this is a use of funds. A lot of people in finance still use those terms, a source of funds and use of funds, because finance is all about the discounted value of the cash flow. So that they're kind of into that. Now, you may want to ask the question, well, what happened to that $26 that, the $26 worth of equipment, book value of equipment, that we got rid of for $52? So we had a gain. So actually what happens in the operating section of the cash flow statement, what we have to do is we're going to show net income, right? And you'll see on this that our net income for the year was 143, just happens to be the same number as what we just calculated there, only a positive instead of a negative there. And so you will see in that income statement, it has gain on the sale of equipment, right? And so what we have to do is we have to take that out of the net income. So we'll have to take that out of the net income in order to get the true cash from operating activities. All right, so that is a brief exercise 22-